We just showed briefly the S4 Capital share price year to date. It's been on a tear, not what you would expect for something that's so linked to the economy as most advertisers have been. How have you managed to achieve that?
Well, I mean, we managed to achieve it. There are 2,600 people at S4 in 30 countries. It's after we just started 21 months ago from ground zero, from I guess a sheet of paper. We built it off three things: first-party data, digital advertising content, and data analytics and programmatic. We have four key principles: purely digital, because that's where the growth is; that holy trinity of data and content and programmatic. The tagline, we go to market as faster, better, cheaper. Faster is about agility. Better is about understanding the digital ecosystem, the six big platforms, the software companies and the hardware companies. And cheaper is not ZBB anymore, because I think that tended to ignore innovation and branding, but certainly efficiency. And then lastly, and most importantly, going back to your comment about conglomerates and the ad holding companies, a unitary one P&L structure. So we've made considerable progress. As you say, we did an equity raise. Our market cap is about £1.6 billion, so crossing $2 billion. And we rank already well into the top 200 companies here on the FTSE 350. So about 180 is our position post the fundraise. So a very good start. 53% of our revenue base is in tech. And I think that's the key thing. We're not compared by the market to the ad holding companies, which over that 2-year period have dropped in value by about 40 to 50%. We're more compared to the tech platforms. Obviously, it's comparing a peanut with an elephant, but putting that one thing aside, we're very much tagged as being part of the tech sector, and that's what we continue to want to be seen as more tech-led. Our ambition is to build a tech-led, new era, new age advertising and marketing services model, which basically disrupts and disintermediates the traditional ad holding companies. So we're really more akin to Accenture than we are to WPP, a firm in which I still retain my personal interest.
And Samana, we'll get to the boycott questions with the likes of Facebook, but just considering the COVID impact, the assumption is that advertising spend is down, but for the tech platforms, is it still up because of structural shifts in the industry?
It's flat this year, Wilfred. I mean, last year, media spend was about, the addressable market was about 550 billion to 600 billion. This year, it will be about 500 billion overall. The digital part of the business is now one half, because digital this year will be flat. Our own growth, as you know from our trading update this afternoon, in conjunction with the placing, our own like-for-like is up 12%. So through COVID, in the first 5 months of the year, we're up 12%. And on a pro forma basis, we're up 14%. So our growth has continued. And that is even greater than that flat level of digital. We saw in the first quarter results of Google and Facebook and Amazon actually with very strong growth. And I think Jeff Bezos and his colleagues have invested the super profit. They earned something like $4 billion in COVID PPE type equipment and methods, in 175,000, I think it is, more employees to help build their model. So they wisely invested in it. But even Google and Facebook actually had relatively good first quarters. I think they will be more affected in Q2, particularly by the impact on SMBs and medium-sized enterprises, which people forget is about 60%. We don't know the precise number, is about 60% of their total ad revenue. So Google, Facebook, and Amazon, don't forget, are the engines of small business. And getting on to things like the boycott, you have to be careful what you wish for, because by damaging their prospects, restricting their prospects, you hit small enterprises and you hit jobs. I mean, the key issue is going to be jobs as we go through the C-19 crisis, and therefore giving an environment, certainly in digital advertising. The reason why digital has been flat and SMBs continue to increase their spending on digital, and even large enterprises do, is it's cheaper and it's more. Network TV tends to be more fixed with the upfronts, which are in decline and probably are going to be nixed by what's happened with C19. But network TV, free-to-air, has come under pressure, not just from the streamers, but because of lack of flexibility on advertising and, of course, absolute cost.